Hello everyone, my name is Pei and I'm happy to see each and every one of you. I'll tell you about the strategy I used to earn $5,550 in one day. It will take you very little time to grasp it. It is very simple but crucial because it is the foundation of trading. Watch this video, go to the exchange and use the strategy to profit today. Before we begin, please like this video and subscribe to the channel. In the description, you will find the link to my Telegram channel, where I publish my personal trading signals every day, through which you can earn with me. Here's some feedback from my subscribers who have already achieved steady profits as a result of the signals we trade on. Subscribe to my Telegram channel for consistent profits in crypto trading. Let's go! My magical ones, it's important to note that supply and demand zones are the foundation of the ICT strategy we discussed in this video. The most accurate entries are made in these areas. Here are the trades that have the best risk-to-profit ratios. These areas are based on liquidity collections and following large capital, that is, the market maker. What is the essence of building supply and demand zones? These are two areas in charge of demand and supply. Let's look at the example. You can see the chart. This is where the liquidity was generated. Then the price went lower, updating these lows and collecting liquidity. Basically, this happens in 1, 2, or 3 candles. 3 candles are the maximum. It's a sharp move. Another way of calling it is a stop hunt. As you know, behind each high and low are buyers and seller stop losses. In this case, you can see the liquidity. This liquidity implies buyers' stop losses. People who were buying here were putting their stop losses behind these lows. Then there was this sharp move down, followed by an upward move. At that point, it is very important to see the structure break down. My magical ones, take note. There is a move down, a liquidity generation, a sideways trend that the market maker created. After that, there is a sharp move down, a liquidity collection, and a structure breakdown. In this area, which starts from the lows, this is the demand zone. After that, we have to wait for the structure to break down and get back to this area. Remember that it's very important that some minimum with liquidity is formed before touching the demand zone. That is, the market maker withdraws liquidity before testing the demand zone. It's the same with the supply zone. This is where the liquidity was generated. In this case, it is liquidity to buy because those people who became in here put their stop behind these highs. And these lows are buy orders. Then there's the liquidity collection, a sharp upward movement, the stop losses kicking in, and a sharp downward movement. A structure breakdown, the formation of a local high, behind which there are also a lot of stop losses. When this downward movement happens, traders enter the shorts and put their stop losses there. After that, there is a liquidity withdrawal, supply zone test, and downward movement. The entry into the trade is made from these areas. For the purchase, the limit order is put on the beginning of the demand zone. The take profit is put before the nearest liquidity pool. For the sale, the picture is the opposite. When there is a trade from the supply zone, you have to put a limit at the beginning as well, stop loss behind the nearest high and take profit behind the nearest liquidity pool. Let's move on to the trading with the Ethereum coin. The chart shows an uptrend movement followed by a correction. There was a manipulation of the lows during this correction. Each low updated the previous one. When another update occurred, there was a sharp upward movement. There was a structure breakdown here. I marked the demand zone on the candle's shadow, these thin lines at the top and the bottom of the candle. Following that, the price began to move towards the area of interest. I put a limit order at the top of the demand zone with a stop loss behind it. Take note of where I placed the take profit. Theoretically, I should have put it on the nearest liquidity pole, but in this case, I put it on the imbalance. It is essential to understand that the chart shows various situations, so even when using strategies, you should always analyze the situation and act in accordance with the circumstances. This is exactly the case. I set a take profit on the imbalance because this local high has withdrawn with liquidity from the previous one and tested the imbalance area on the higher time frame. This rectangle represents the imbalance on the higher time frame. This suggests that there is a possibility that the price will go further down. But there is a support area, so I put a limit order here, a stop loss here, and a take profit here. Of course, before opening a trade, I sent the signal to my Telegram channel so that each member could profit along with me. After that, I logged into the exchange. I chose the isolated margin and 20x leverage. I set the order price at 1,872.6 and the order at 136. I set take profit at 1,912.76 and stop loss at 1,861.6. Then I opened a trade. My magical ones, make sure to put everything you learned in my videos into practice. After watching each video, go to the exchange and follow the instructions you received. There is no point in learning theory if you do not practice constantly. Let me tell you how my trade went. First, the price almost reached the stop loss. Then it followed the trajectory you can see on the screen. The profit was $5,550. $5,500 in just one day. This was just crazy. It was a great trade. My Telegram channel members profited alongside me. Here is some feedback from those who used my signals and made a profit. As you can see, everything is very simple. In the video description, you can find the link to the Bybit exchange. I do all of my trades here. The reliability of Bybit is a huge plus. I'm confident that my money will be saved and that I will be able to withdraw it in full. I've been trading on this exchange for years and I'm confident in its reliability. Go to the link right now, register, and start trading. Bybit registration is entirely free. However, theory should not be overlooked when practicing. Traders frequently stop studying because they believe they know everything there is to know about trading. In such a case, it will be long before they fail. No matter how experienced you are as a trader, you should always be learning and growing. Make sure you put the strategies to the test. And if you want to trade with already proven strategies and get the most important information, then follow the link in the description to my Telegram channel and join the team of successful traders. In this channel, I share my personally tested strategies that help my subscribers earn more than $2,000 per week. My channel has the information you need to make a consistent profit, so subscribe now by clicking the link in the description. You now know where to trade and where you can get the information. Remember that in order to make money, you must keep up with current events and keep your head cool. You can't expect to make money if you let your emotions run wild. As a result, trade wisely. Always think before you act. A trader's main activity is competent analysis and strategy development. So, always be aware of your risks, weigh your arguments, and only enter a trade if you're certain of your action. And don't forget that trading is always risky, so you have to be very careful. Always conduct a competent analysis and use a tried and true strategy to reduce the possibility of failure. Please like and subscribe to the channel so you won't miss anything important. There are many interesting and helpful videos waiting for you. That was me, Faye. Have fun trading. See you in the future videos.